Hey traders, Raghee here. I was thinking about something today when I was doing our post-close chat, and whenever the markets are down, it's an interesting psychology, and the folks in our room know that up and down markets have to be understood within the context of the underlying market trend, because buy the dip, sell the rip, those are trending market trend conversations. When is the market trending up? And when is the market trending down? And therefore, those rips and dips are actually corrections. And capitalizing on a trending market is very different than capitalizing on a choppy market. And in chop, man, bad things can happen. If there's anything that is an account killer, it's chop, and it's misidentifying chop, and it's disrespecting chop. So are you misidentifying and are you disrespecting? Let's talk about how to identify first. So as soon as you see a blue grab candle on your chart, and this is an indicator that I developed many years ago, it's probably about 20 years now, and it's a very simple concept. Utilizing the 34 period exponential moving average on the high, the close, and the low. But why do we do that? In order to understand what the underlying momentum is. And it's that organization of momentum that ultimately yields some sort of up or down trend. So if I don't see consistent green for an uptrend or consistent red for a downtrend, I know there's some shift happening in sentiment, that there's some shift happening in momentum, and that's when we need to shift our underlying strategy and expectations. So why do I use this? Because it gives me a heads up. When a lot of other traders are still thinking about trending strategies, we know the market's changed the underlying psychology. It's chop, completely different animal. So we're looking for overbought and oversold conditions. And going into tonight, 9 p.m., the president's going to address the nation. And this is going to make the Asian session a pretty interesting one tonight. So I'll be watching it. I'll probably be logged into the chat room doing it. So it'll be an interesting kind of evening looking at the way in which this market may defend. This is the NQ right here, the 57, 55, 57, 60 area. I'm looking particularly at 57.50. Now, another market that's going to be very interesting to watch is the way the Nikkei, which I think, and this is a pretty good argument, of the four major indexes that I watch, could the Nikkei be the one that is actually looking like a very fresh downtrend? If it is, we could still see a bounce here, but I'm going to limit the expectations I have for a bounce to about this area here, 730, 19,730. That might be the first swing short that we get. Well, this could be a quick bounce as the market could catch a bid off previous lows and the 200 period simple moving average. What's interesting is I like to ask this question. Going into major events like tonight's 9 p.m. address here in the U.S., who is the most vulnerable? Which market participants have run out ahead of a narrative? Therefore, they need at least the narrative to be equal to either the optimism or pessimism that they've discounted into the market or more. That's a vulnerable place to be. And when I see this much heaviness, this much pressure to the downside in a number of these indexes, I think, well, it's the sellers that have run out ahead of the narrative. And if anybody's ripe for a short squeeze, it's going to be them, because we've already factored in a lot of pessimism. How do you capitalize on so much pessimism being discounted into the market? In the context of chop, you look for oversold conditions. And confirm them with things like the stochastic, and confirm them with things like the box levels. I'm going to talk about the levels that we're long from in the premium video, but think about this as you go into the Asian session. One thing you could look for across the three main markets I'm watching, the way in which the 5 minutes are tracking higher. Is the market willing to start to stair step on this very short-term time frame and carry prices higher as the short squeeze very gently begins and builds into the heart of the Asian session, which 9 p.m. will definitely sound the beginning of that? Or do we get something much more shocking than the market anticipated, and we start to pressure those lows again in weakness? And I'm betting on the fact that the markets run way out ahead of the narrative, because usually that's what the markets do, right? And so that's what the bet is on, that the sellers have overestimated, have overdone, over-discounted, and we take advantage of not only that psychology, but oversold levels across the Nas, Nikkei, and Dow. I'll see you in the premium video.